Welcome back. Today, we're going to unpack something really interesting that happened in the Indian stock market. On September 29th, if you just glanced at the headlines, you'd think, boring, nothing happened. But if you scratch just below the surface, you find this hidden battle raging between fear and some incredible confidence. So let's dig in and see what was really going on.
So here's the big question, right? The market was on a 7-day losing streak. Now, that should mean panic in the streets, shouldn't it? But under the hood, the big players, the smart money, they were acting with this surprising calm, this real confidence. How's that even possible? Let's break it down.
And this is the number that hides everything. A tiny drop of just 0.08%. I mean, that's basically zero. On most days, you just scroll right past it and not think twice. But on this particular day, that number is telling a huge lie.
Yeah, that calm, it's totally misleading. It's more like this massive, invisible tug of war happening just out of sight. While some parts of the market were getting dragged down, other parts were actually surging forward with some serious force. And it just so happened to balance out perfectly, creating this deceptive quiet.
Okay, so first, let's look at the story on the surface, the one everybody was seeing on their screens. This is the narrative of anxiety and caution. So yeah, the official vibe was definitely be careful. For starters, it was the 7th day in a row of losses. You had all this global uncertainty making everybody nervous. And then, locally, you had two big question marks. What was the RBI, India's central bank, going to do about interest rates? And what was the deal with these really important trade negotiations? It's no wonder traders were just sitting on their hands. But, that's only half the story. If you peel back that layer and actually follow where the big institutional money was going, a totally different story starts to unfold. One of really strategic, confident action. And that brings us to this perfect analogy of a duck on the water. On the surface, the market just looked like it was gliding along, totally serene. But underneath, the big institutional funds were paddling like crazy, shifting huge amounts of money between different sectors. Okay, so you're probably wondering, how do they move all of this cash around without sending the market into a total panic? They use something called a block deal. Think of it like a private trading room, a VIP lounge for the big institutions. They can buy and sell massive chunks of stock without rocking the boat for everyone else. If you really want to know what the big players are up to, this is where you look. And believe me, on this supposedly quiet day, those VIP rooms were buzzing. We saw huge trades in companies like Supreme Petrochem and a lot of shuffling around in industrial stocks like Bharat Gears and BLT Logistics. This is all the proof you need that the big domestic funds weren't just waiting around. They were absolutely making moves and placing big bets. All right, so where was all this smart money flowing? Let's follow the trail because it leads us to some really incredible pockets of strength and optimism in the market. Well, for one, look at a company like Bharat Electronics, a huge defense player. They announced new orders worth almost 1,100 crore rupees. That's a huge number, over 130 million US dollars. That is a massive vote of confidence, not just in the company, but in India's whole domestic defense sector. And this wasn't just a one-off thing. Check out this call from Goldman Sachs on Indigo's parent company. They're not just saying, hey, this might go up a little. No, they're putting out this huge long-term target of 6,000 rupees. That signals a massive belief in the future of air travel in India. And this pattern just kept showing up. The top brokerage firms were putting out strong buy ratings on key companies. Motilal Oswal was super bullish on Mahanagar Gas, betting big on city gas distribution. From energy to aviation, you can see the pros were absolutely looking right past all the daily jitters to the long-term story. So with all this action happening under the surface, what did it actually create? Well, it created this massive split right down the middle of the market. You had some really clear winners and some really clear losers. You can really see that divide right here on this chart. On one side, you've got these domestically focused sectors. You've got PSUs, those are the big state-owned companies, along with auto and energy, all showing real strength. But on the other side, you have sectors that are much more tied to the global economy, like IT and pharma, and they were pulling things down. And this trend played out with some of the biggest names out there. Auto giants like TataMotors and Maruti were up, probably thanks to strong local festival demand. But then a huge IT company like Infosys was down, maybe because of worries about things like H-1B visas in the US, which, is a huge deal for the Indian tech scene.
It's a perfect picture of that domestic versus global story playing out.
Okay, so after all that, what does it mean going forward? We've got this incredible tug of war going on between the caution you see on the surface and this deep institutional confidence bubbling underneath. So which side is going to win out?
Right now, the data tells us the market is basically just waiting. It's holding its breath. Futures traders are pulling back, which is a classic sign of caution. The whole market is waiting for a signal, and that signal is going to come from one of two places: the Reserve Bank of India's next policy decision or some real news on those U.S. trade talks.
And so, that's where we are. You've got two powerful opposite forces in a perfect deadlock. The quiet confidence of domestic funds betting on India's long-term growth story versus the very real caution of traders worried about what's happening globally. The market's next big move? It's all going to come down to which of these two forces blinks first.